Today, we're zeroing in on Quant, or QNT, and why recent developments could signal a game changer for its role in finance. From UK-US regulatory bridges to EU adoption frameworks, and Quant's own Layer 2.5 rollout that's drawing institutional eyes. Plus those intriguing wallet moves from Coinbase. If you're holding or eyeing Quant, stick around because we'll connect these dots and break down my 3-day chart analysis, complete with load zones, stop-loss levels, and 5 take-profit targets up to $500. Let's understand how interoperability meets real utility in a regulated world. First off, picture this. The UK and US are teaming up on a task force to explore cooperation on digital asset regulations. As the Financial Times highlights, with the US leaning towards stablecoins over central bank digital currencies, or CBDCs, Quant's Overledger tech could bridge stablecoins and tokenized assets across borders. Think seamless transatlantic finance. This setup shines for Quant, positioning it as a key player in interoperability between the two markets. Overledger has the potential to link UK banks with US stablecoins, making cross-border plays smoother and cutting compliance costs by up to 40% for distributed ledger institutions, or DLIs. It's like building a highway for tokenized securities by 2026, when the UK's FCA regime goes live. On the EU side, MiCA is live, rewriting the rules of money. Tokens like QNT, XRP, XLM, IOTA, and CHEQ are now integrated into the EU's digital finance framework. QNT stands out as a selected partner for programmability and interoperability. While XRP handles virtual asset services, XLM expands stablecoins, IOTA supports digital identity pilots, and CHEQ builds trust registries for blockchain services. Europe's entering a new era where these coins shape regulated blockchain futures, backed by official sources. For newcomers, MiCA is the EU's law ensuring crypto operates safely, like requiring licenses for providers to protect users. Shifting gears, Quant itself is pushing boundaries with Layer 2.5, called Fusion. Forget Layer 1 versus Layer 2 debates. This is about institutions moving assets across chains with full control over privacy, compliance, and security. It's the missing compliance-grade layer for DeFi, or decentralized finance, which is basically peer-to-peer financial services without banks. Quant's network lets institutions issue new assets directly into an interoperable setup, making them ready for global use. For existing assets siloed on multiple blockchains, Fusion unifies them into one layer, cutting complexity and boosting liquidity. Interoperability has been in Quant's DNA from the start. Today, they're rolling out this vision for an institutional Layer 2.5 network. Assets can be traded, swapped, and settled natively within the network or with external Layer 1 chains, using things like USDC for liquidity. The goal? Migrate institutional traffic onto Fusion, powered by Quant at the core, for a more efficient, secure system. Start following their updates. Testnet is coming soon. And guess who's paying attention? Quant's CEO, Gilbert Verdian, spotlighting how UK's Regulated Liability Network, or RLN, is forming with Hedera in the mix for digital bonds and tokenized money market funds from players like Lloyds and Aberdeen. That's where Overledger Fusion steps in as the connective tissue, linking UK on-chain finance ecosystems. QNT and HBAR aren't rivals, they're core pillars. With Overledger Fusion, we're looking at the entire UK on-chain finance system, enabling cross-border DLIs and AI blockchain plays while slashing costs. Speaking of real utility, global capital markets handle roughly £50 trillion in securities, yet the infrastructure is outdated. Settlement takes 2 days, liquidity's trapped in silos, and complexity hurts efficiency. This deadweight impacts pension funds, institutional investors, and anyone with market money. After false starts, Distributed Ledger Tech, or DLT, is delivering on its promise to rewire financial markets. Quant's article dives into how the future is programmable, interoperable, and far more efficient. Exchanges like Kraken are ready for Layer 2.5, where assets trade natively or with external chains for liquidity. Institutional traffic will migrate to Fusion, powered by Quant, enabling secure transactions. Notably, they hold over 234,000 QNT tokens. And check these recent transfers. 2 from Coinbase to private wallets, 1 for 951 QNT, totaling close to 8,800 in that wallet. Another for 1,135 QNT, totaling almost 9,000. Both accumulated in the last month, with no Ethereum, no outflows, just holding Quant. These are signs of quiet accumulation. Now, let's dissect this 3-day Quant USD chart. Price is hovering around $90. I've anchored Fibonacci levels from the December 2024 local top to April lows. These show potential resistance and targets. A descending orange dashed trend line from that December top has rejected price in June and July. Currently, price sits below all EMAs, 10, 21, 55, 100, and is crossing below the 200 SMA, the green line. If the weekly candle closes below, it might mean consolidation lower before any upside. But watch the green load zone between $75 and $95. That's my DCA, or dollar cost averaging, area for entries, meaning by gradually to average cost. The red dashed line at $70 is my stop loss. A close below invalidates the short-term trade, though I'm holding a long-term bag as I believe in Quant's fundamentals. If it dips, I'm eyeing accumulation around $50. Below, the Heikinashi RSI is in oversold territory. Last 2 times it hit this low on the 3-day, we saw upward swings after a few days, marked by those green arrows. The VRVP, or Visible Range Volume Profile, shows the point of control at $67, where most volume traded. For profits, I've circled 5 take-profit zones. I'll be trimming at 130, say 20%. 170, another 20%. 240, 15%. 350, 10%. And $500, the rest. I'm using a trailing stop once I hit these to lock in gains as price rises. Overall, this setup suggests accumulation now, with potential for a pop if we hold key supports. My honest outlook, it's bearish short-term if we close below the 200 SMA, but fundamentals scream long-term strength. I've connected regulatory tailwinds, Quant's Layer 2.5 innovation, institutional buys, and this chart signals. It's clear QNT is building rails for tomorrow's finance. In my opinion, projects like this thrive in adoption waves. So if this helped, hit that like button, drop a comment on your Quant targets, and subscribe for more daily alpha. Oh, check my previous Quant videos, links on screen. Thanks for watching. Never financial advice. See you tomorrow.